Hello and welcome. You're watching The Mint. I'm Abhishek Singh. Now, the Adani-Hindenburg issue has been discussed ad nauseum over the last 3 weeks. But there are certain key developments which are happening as we speak that we thought we should bring to your attention and, of course, get view of an expert on what you should perhaps do if you're a retail investor and are caught in the middle of this quagmire. To discuss that further, I'm joined by Mr. Lloyd Matthias. Thank you for joining us, Mr. Matthias. Thank you so much.
Thanks, Abhishek. Great to be on your show.
All right. So first things first, let's get started with the fact that SEBI or the Securities and Exchange Board of India is expected to submit an update to the finance minister. So these are, the way in which this entire episode has unfolded has raised several questions. One of those key questions is, of course, the role of regulators.
Abhishek, I would like to think that, what's unfolded in the last fortnight, so to speak, kind of puts a question on the robustness of Indian corporate governance in general. And the reason I say this is because a lot of what the Hindenburg Research report has so-called unearthed is not really confidential information. It's information that has technically been in the public domain for a while. The fact that it was kind of unfolded at a particular time, just before the FPO, I think was obviously part of their short selling strategy. But what for me is a concern is that despite a lot of this information being known, why weren't the regulators ordering on their own a bit of an investigation to understand the whole thing? And I want to state very clearly, it's not that the Adani enterprises were doing something that was patently illegal. It's just trying to make sure that a wide swathe of investors know about the various issues that Hindenburg brought out. The fact that it came out all of a sudden and became a public splash, I think doesn't speak too well. But more important, it also puts a question on the robustness of our corporate governance standards.
Right. And when it comes to a robustness of our corporate governance standards, where do you think India ranks? Given we have several of such, episodes, and I'm of course referring to Satyam, Yes Bank, and so on and so forth.
Not very well, I'm afraid. And I would say, if you just look at the last decade, starting with the Satyam issue, but even more recent things like the Nirav Modi or the Kingfisher Airlines or the Yes Bank or ICICI. And sadly, even in the new age economy companies, things like what we're witnessing around Bharat Pay and Go Mechanic and a whole series of them, I think it casts a little bit of a doubt about India as one of the world's good investment destinations. And really, what the pandemic had really proved was that India was actually emerging as possibly the topmost investment destinations, given the fact that China's handling of the pandemic and some of the other issues with internal domestic politics out there have kind of made global investors a little wary. The US and Europe have been widely played out investment destinations. So purely as a large market with a growing economy, with a booming startup ecosystem, with democracy in full play, I think India would possibly in the next 5 to 10 years be easily the world's most premier investment destination. I think this has cast a bit of a shadow of doubt, especially coming at the back of previous instances. And global investors are keeping a close watch. So everything from, some of the fracasses on retrospective taxation that we saw a couple of years back on the Vodafone issue, I think a lot of these create elements of doubt with global investors, which was something that was quite undesirable. So I really wish,
perhaps even avoidable.
Oh, absolutely.
Given all this information was in public sphere.
Absolutely, completely true. And specifically in the context of the fact that this was a high-profile organization. This was not one of the small. I'm just given the weightage of what the Adani Group companies have in the Sensex or in the market indices in general. I think this was a high-profile company. This is not some small unknown entity that a global investment firm has spotlighted. This is something that was in the public domain. So I really wish that was taken care of. The second point I want to bring out, Abhishek, and I think it's a general lesson for corporates in India at large, is that while you may match up with the world's best in terms of your scale, in terms of your efficiency, I think if you don't look at this softer aspect of governance, or the ESG is kind of becoming the new buzzword, I think it's no longer a nice to do. I think it's imperative. And I can tell you from experience that a lot of global investors weigh disproportionately on this aspect of it. And this is not just about following the letter of the law, but also following the spirit of the law. To what extent is your governance purely is really independent, right? If you have your share of independent directors, how many of them are truly independent and can raise a voice against the management and can point to a certain shortfall? I think it's a larger lesson for corporate India in general.
So if you were to sort of, summarize it for us in 3, 4 points, I mean, in terms of the kind of key lessons that we have taken in terms of corporate governance, as you were referring to it earlier, what would those 3, 4 lessons be?
I think the first, our corporate governance framework needs to be looked into. I think we have relevant rules and regulations, but the quality of the execution and enforcement has to be re-looked into very severely. Second, I think corporate India needs to do a bit of soul searching. I think they have to recognize that just ticking the boxes on governance is not good enough. I think they have to ensure that they truly have independent directors who can really be a voice of reason, if nothing else, to protect their own integrity and reputation in the long run. I think thirdly, corporates need to put out a lot of information to shareholders in the public space so there are no market corrections that are abrupt. In this instance, I would think if some of this information was widely publicized, the market wouldn't have reacted so adversely. I think lastly, as a general caution for investors, I think whenever they see a lot of volatility and see the markets, particular groups being rewarded, I think they need to do their own little bit of due diligence, try and read deeper into it, not just go purely on market sentiment. That would be my kind of 4 points of learnings from this entire exercise.
All right. And one interesting thing which has also been seen is the fact that while there was $100 billion sell-off, Mr. Adani personally perhaps also lost like $40 billion from his personal wealth. But what did not happen, and perhaps in scenarios like this was probably likely to happen, was the fact that there was no larger sell-off in the markets. Investor confidence in the larger Indian market remained intact.
Oh, absolutely. I think this doesn't really dent India as a great investment decision. This is a setback for sure, but it doesn't dent the fundamentals. And I think the two key things that have worked in India's favor in the recent past, I think one has been relative political stability. If you look at the last 8, 9 years, we've had a majority government. We've taken some fairly market-friendly steps, right? Be it the GST implementation, be it kind of opening up of certain sectors of the economy that were closed. I think that's one. The second, I think, is getting our digital infrastructure and stack in place. I think one of the big insurances against rapid market volatility is the fact that there have been a whole lot of new retail investors that have got into the market in the last 2 or 3 years. And for that, we really have to have the new fintechs to thank. They've suddenly made the whole process of a layman investing into markets through mutual funds so much more simpler, as opposed to a decade ago when one had to go through an intermediary. So I think the influx of retail investors, the fact that India really has now a sizable base of investors who are common people, it's not just a bunch of speculators, I think that accounts for the stability of the market to a large extent. But I think the biggest success story is India's rapid development and the robustness of our digital economy.
Right. So we've spoken about corporate governance, and as you were referring to retail investors towards the end of your last response, a couple of things which perhaps India can do to ensure that retail investors, the way perhaps they took a beating when Adani stock sell-off started, they can be insulated from it?
It's difficult to absolutely insulate investors, but I think on the side of investors, like I said, the more they read into the market, the less that they do kind of look at spot trades and look at a slightly longer term stay in the market, I think is one aspect. The second is the ability to actually go after fundamentals. I think the truth is that a lot of retail investors largely speculate and go by sentiment. I think the moment you start focusing on fundamentals, in this instance, clearly, despite the fact that the Adanis have a lot of cash generating businesses, the fact that they've over leveraged on debt is quite well known. I think it's actually staying close to your fundamentals of investment. I think that's something that retail investors need to keep uppermost in the mind and not just get swung by euphoria.
Right. Just because a particular stock is in the news and just because it's simpler, I mean, platforms like Zerodha, etc., have made it easier for you to come on board and start investing and trading, doesn't mean you go after every name that you hear in the news or wherever else.
Absolutely.
All right. On that note, thank you so much for talking to us, Mr. Matthias.
Absolute pleasure, Abhishek. Thank you so much.